Good afternoon, everybody. Thank you very much for giving us a little bit of your time this afternoon and joining us for what doctors need to know about the CARES Act for provider relief funds. Since the pandemic started about 9 weeks ago, Parsons, Bailey, and Latimer's has conducted a webcast series. This is our 22nd webcast, and I want to thank all of you again for joining us for today's today's webcast, and we're excited to have you here. It looks like we've got a few others that intend to join today's webcast, but in the interest of everybody's time, we're going to proceed with our webinar today. I want to take you through just briefly the format for today's webinar. All of your lines will be muted. With that being said, we do encourage Q&A throughout today's session. If you would please use the chat feature and submit your questions to my colleague, Brian Elwood, and or to me, we would gladly facilitate and try and answer those questions throughout the discussion of today's webinar. Additionally, we will have time at the end of today's discussion to address your questions as they arise throughout the presentation today. I wanted to make you aware that today's webcast is being recorded and that we will be sharing all of the slides with you tomorrow, along with the link to today's webcast. Before we begin, and I turn the time over to my colleague, Kevin West, who's going to be giving the substantive presentation, I need to share a brief legal disclaimer with you today. Today's presentation is a source of general information and should not be considered as legal advice. If you have any questions about how this relates to your business, you must consult with your legal counsel. So it wouldn't be an appropriate webinar without a legal disclaimer from a law firm. So with that, I would like to now turn the time over to my colleague and the chair of Parsons, Bailey, and Latimer's Healthcare Department, Kevin West. Kevin, I'll let you take it from here.
Thank you, Jason, very much, and good afternoon to everyone. Glad to have you here with us. Let me just piggyback onto Jason's disclaimer. Things are changing very rapidly on the topic that we're talking about today, even within days since this presentation was prepared. There have been changes. So there's a lot we don't know. There's still a great deal of guidance that is lacking on the things we're talking about. I'm looking at articles from other professionals around the country every day, and I feel like I'm in the mainstream of what the thinking is out there, but there are a lot of answers that we don't have. I'm going to try to give a good overview and hopefully help, but just recognize that. So a week ago last Friday, I had a doctor in my office sitting across the conference room table. We were social distancing, of course, but there in the office. He mentioned to me the fact that a few weeks earlier, he had had a large amount of money suddenly appear in his Medicare EFT account. And he said, Kevin, you know, what is this? Is there strings attached to this money? And hence the title of this presentation. And as I talked with this doctor and as I've talked with many others since, it's been very clear that there is a tremendous amount of confusion. You know, the question, what is this money that showed up? If I use this money, are strings attached? What if I got a paycheck check protection loan from the government or some other relief fund money? How does that affect my eligibility for this money that just appeared? And what do I need to do to protect myself? So these are some of the questions that we'll talk about today. And today we really want to, during this hour, spend time, a little bit of time on these three programs that you see on the screen. I'm only going to have brief mention of the Paycheck Protection Program, and some people may have been confused signing up thinking that was the focus of this program, and that's the most highly publicized program. But really, I'm only going to touch on that to differentiate it from the main topic here today, which is the Provider Relief Fund. The other program I'll mention briefly is what's known as the Advanced or Accelerated Payment Program. Touch on that just briefly, and then the bulk of the time today will be on the Provider Relief Fund, which is the money that appeared several weeks ago in many providers' accounts. So with that, we'll go to the next slide. So the first of these programs is the Paycheck Protection Program. Great deal of media coverage of this. People seem to have some awareness of what is happening here, but it applies to businesses with less than 500 employees. It is a loan, but some or all of that loan may be forgiven if the borrower meets certain conditions. Let's go through those conditions very briefly. This is a complicated area, but there are 5 general conditions that are involved here in order to obtain forgiveness. First of all, these funds can only be used for certain designated purposes. The main ones there are on the screen. You see payroll, rent or mortgage interest, utilities, and employee benefits, specifically health care expenses, retirement contributions, and the employer's share of state taxes on their employees. Now, the key thing about obtaining forgiveness of the PPP money is that at least 75% of that money must be used for the first and fourth bullets, or payroll and benefits. And the funds must be used within 8 weeks. So there's an 8-week window of time in which those funds must be used. Continuing on, there is additional conditions of forgiveness. During this 8-week usage period, your full-time employee headcount must stay the same. If it does not, then you don't lose all forgiveness of the loan, but you may lose a proportional forgiveness of that. Secondly, salaries and wages of employees earning less than $100,000 may not be reduced. And basically there is something of a grace period, because if there is some reduction in the early months, then that must be fully restored by June 30th, 2020. And if that is done, then all the salaries, all the employees are restored by June 30th, then there can be full forgiveness. So those are the basic terms and conditions of the PPP program. We could spend the entire hour on that program because there is great controversy, a lot of questions. But again, that's not our focus today. I just am mentioning that mainly to differentiate. The other federal relief program for healthcare providers is what's called the Advanced or Accelerated Payment Program. And this is basically Medicare saying to doctors, we are going to give you an advance on your Medicare reimbursements based on your prior billing history. And that program started back in March. There were 24,000 applications that were processed by Part B providers, and there were about $40 billion in payments. And these monies, in contrast to PPP, these monies are in fact a loan and must be paid back over a 1-year period. So basically the government is just saying, we're giving you your reimbursements in advance, and then you're going to have to pay it back. That program was actually suspended for a number of reasons. One main reason being that the government felt that providers were already being sufficiently assisted by some of the other programs we're talking about today. So as a result, they've suspended that program, they're reevaluating, and my own belief is that that program is not going to come back. So the third and final program related to healthcare providers is really the main focus of our webinar today. That's what is known as the Provider Relief Fund. And with all three of the programs we've talked about, it really is important to use the correct terminology. If you just start talking to someone about this money I got from the federal government, it's completely up in the air as to which of these programs you're talking about. So it's very important as you're talking to accountants, lawyers, other professionals to use the correct terminology. So the Provider Relief Fund was part of the CARES Act passed by Congress, providing for $100 billion to hospitals and healthcare providers of virtually all types. $30 billion of that money was sent to providers by direct deposit starting on April 10th. And financial people talk about tranches. So the first wave or first tranche of that money started appearing in providers' accounts the week of April 10th, or starting with April 10th, and continued to flow for about the next 7 to 10 days. Those funds were then depleted, and it was determined that a second tranche of money of $20 billion would then become available, this time not automatically, but by application from healthcare providers beginning on April 24th, 2020. So I'm going to talk about the first tranche. I'm going to talk about the second tranche in our discussions today. So let's go over, and by the way, there's a third tranche that we'll get to as well, but let's talk about the first and second tranches because they are the most important ones. And you may have noticed the first tranche, 30 billion, second 20, that leaves 50, and that 50 is going to be part of the third tranche. So here are the 5 topics that I want to cover on the first tranche money that suddenly appeared in people's accounts a few weeks ago. And let's cover these 5 items. So the first item is the payment process to providers. And if we can go to the next slide. So the mechanics of the way this has been working is that payment appeared by automatic clearinghouse deposit, ACH deposit, to Medicare providers based upon their tax ID number that is on file with Medicare, with CMS. And it's a complicated thing, but basically that payment came to approximately 6.2% of the providers' 2019 Medicare billings. And I believe there's mostly physicians on this call. There may be some hospitals, and I am much more familiar with the physician side of things than I am the hospital side of things. So those of you who may be in the hospital group, take that understanding. These payments came through United Healthcare and its subsidiary Optum Bank. The ray line of these credits to your account should have said HHS payment on that ray line. And again, the key thing to understand about this money is that it is a grant, not a loan. Right, going to the second issue here, and the next slide. So what is the eligibility criteria? And basically that's on screen as you see there. There is several requirements. First and most importantly, you must have been a Medicare provider in 2019. And you must be a Medicare provider in good standing. You cannot have been terminated at any time or excluded from Medicare, Medicaid program, or some other federal health care program. And interestingly, you must also have provided health care services subsequent to January 21st of this year. Many providers did shut down at some point, many of them in February or March, but as long as you saw patients at some point after January 21st, you remain eligible. You must also not have any unpaid federal tax liability. Going on for some very another very important criteria for eligibility is that you must have, subsequent to January 31st, have performed diagnosis, testing, or care of individuals with possible or actual cases of COVID-19. Now, that eligibility criteria caused a lot of consternation, and then HHS came out with one of the few pieces of actual guidance we have, and they said, that HHS broadly views every patient as a possible case of COVID-19. So the first bullet you see is the statutory language that Congress passed, and the second bullet is the gloss that HHS put on that, being their interpretation that essentially all patients are possible cases of COVID-19. So we've covered now the eligibility criteria. So going to the next slide, very critical aspect, and maybe the most difficult and controversial aspect, is the uses for this money. And there are both affirmative and negative mandates regarding the use of the money. First of all, on the affirmative side, the money is supposed to be used, and these are exact quotes from the statute, to prevent, prepare for, and respond to the coronavirus, and it's important to notice the ands and the ors here, and to reimburse the provider only for healthcare related expenses or lost revenues that are attributable to the coronavirus. Now that language is really the crux. This is telling us what the money can be used for. And again, we've had precious little guidance on what this means, although we have seen once again somewhat of a gloss put on this by HHS, where they're really granting a little bit more flexibility to the language that Congress used in the statute. So we're going to talk a little bit about what this means as we move forward here. Now, I mentioned there were affirmative obligations on how you should use the money. There are also negative requirements on how this money may not be used. And one of the most important is that this money cannot be used, and here's the quote from the statute, to reimburse expenses or losses that have been reimbursed from other sources or that other sources are obligated to reimburse. Now, again, that's caused a lot of question. What does that mean, reimbursed from other sources? And clearly it means money from other places such as, for example, a PPP loan. So if you have received a PPP loan, you cannot use the federal relief fund money to reimburse the same expenses that you used the PPP for. If you got other federal relief money, for example, that advanced or accelerated Medicare money, that would also be something that you could not double dip with or use to reimburse for the same thing. So this is a very important requirement. And then secondly, the law says that the money cannot be used to pay the salary of any individual at a rate in excess of $197,300. So that's important in the sense that it tells us, number one, that the money can be used to pay salaries, but there is a limit on that. So that is valuable in that sense. Going to the next slide, we've now covered the mechanics of the process, we've covered eligibility, and we've covered the uses of the money. The fourth item that is important to understand is that there is a reporting and record-keeping requirement. And I cannot emphasize this too much, that any of you who have received this money need to maintain scrupulous records regarding your use of these funds. So, and in particular, if you receive more than $150,000 in total funds from any program in the CARES Act, that you will have to actually file a quarterly report with both HHS and the Pandemic Response Committee. The government has promised that we're going to get information on how that reporting is to be done and the particulars, and the format, and all of that. We do not have that yet. We've just been told that it is going to happen. Next and final item regarding the first tranche money, as we go to the next slide, is the requirement of an attestation. And as a lawyer, when I see a requirement of attestation, to me, the red flags go up, because that is a legal act. And you, as a provider and a recipient of federal money, attest, you are basically stating, in a sense, under oath or legally, that what you are affirming to the government is in fact true, and that there are in fact penalties if those attestations or affirmations are not correct. Now, originally, this attestation was to occur within 30 days of the receipt of monies, which began back in April 10th. It would have actually expired a few days ago, but fortunately, on May 7th, and actually since these slides were prepared, the government granted an additional 15 days. So now the attestation deadline is actually May 24th if you got money on April 10th. And so basically you would count 45 days from the date you receive the money. And if no attestation occurs, then the provider will actually be deemed to have accepted the money as if he or she had attested. So you don't get out of things by not responding at all. If you don't respond, you will be deemed to have attested. Now, going on to the next slide, the terms and conditions. Now, when you attest, you are shown a document of terms and conditions. That document is actually 10 or 11 pages long. It's very detailed. It's very legalistic looking. It mostly covers the things we've just talked about in terms of eligibility and use of the money. But it's something that needs to be carefully reviewed. And you also attest to the fact that you will keep records and that you are willing to provide reports to the government. So all of this has to do with attestation. I was in front of an administrative law judge one time in a Medicare hearing, and that administrative law judge said something to me about the receipt of money from the federal government. She said, when you deal with the federal government, you must turn sharp corners, or you must turn square corners, was her phrasing. And kind of an interesting way of putting it, but she was trying to say that recipients of federal funds do so on an honor system. They do so with terms and conditions, and those must be honored very, very carefully. All right, we've talked about the first tranche now. Let's go and talk for a moment about the second tranche of monies, the $20 billion. Now, here there are some differences. And in terms of eligibility, in order to be eligible for this money, you must have received first tranche monies from HHS by station portal with HHS by April. So again, for this set of funds, you would have had to do those two things. Is this money a grant or loan? Once again, it's a grant. It does not have to be paid back if you are eligible and if it's used properly. There is no application deadline as of this date. This is not a first come, first serve program. They are processing these applications on a rolling basis, and my understanding is every Wednesday they issue checks or deposits to providers. Continuing as to the second tranche, you have to have certain information when you go to the HHS portal to apply for this money. And again, the full and correct name of this portal, let me read it to you. It is the Provider Relief Fund Application Portal. If you go to hhs.gov and search, you will find that portal. But you go there and you must have certain information to apply. You need to have your most recent federal tax return, which for some of you who filed quickly, that might be 2019, but because of the extension for many doctors, that will be 2018. And you must have gross receipts or sale information from your federal tax return, most likely for most people for 2018, showing gross receipts or revenues from all patients, not just Medicare patients. And then they would like you to estimate your revenue loss for March and April of 2020. So basically what the government is doing is trying to see what your estimated losses were. They're going to be comparing that to Medicare reimbursements that you've gotten over the past few years. And so, for example, say in 2018, your Medicare reimbursements were only 33% of your total patient revenues. In that particular situation, you are likely going to be eligible to get reimbursement from the second tranche monies because it will be obvious that the reimbursement based on Medicare was not going to fully reimburse you for all of your lost patient revenues. So on this particular issue, we've had some vacillation from the government, and we've had confusion over whether they're really looking at 2018 or 2019. There's confusion about the formula and whether they're going on Medicare or lost revenues. The slide you have in front of you is the clearest information we have right now. But we've seen some vacillation on the guidance here. So basically, if you provide the information to the government, they're going to do the calculation. You as providers don't need to worry about that part, but you will need to be prepared as you apply to have that information. All right, going to our next slide. As I mentioned earlier, applying for this money must be done online with the HHS portal. When you submit the application, and if they find that the application is complete, you will be notified by that, but you will not be given any other indication until they actually disperse funds to you, which is typically within 10 days. But I have spoken to some providers recently who did apply, and it has now been more than 10 days for them. So the government is not holding strictly to this 10-day disbursement. As I mentioned earlier, approvals are happening on a rolling basis each Wednesday as we go along. All right, next slide. So the second tranche money, like the first tranche money, also has terms and conditions. These are generally the same as for the first tranche, but here's the interesting distinction. On the first tranche money, the attestation is happening after the fact, right? The money appeared in your accounts, and then you were given 30 and now 45 days to attest. With the second tranche monies, it's the opposite. You attest at the time you go to the portal and make your application. So that is the major difference on the second tranche. Okay, going to the next slide. I mentioned earlier that of the $100 billion that was allocated, the first and second tranches only covered half of that money. So there are still $50 billion for healthcare providers that have not yet been dispersed. And really, we're waiting for guidance on how exactly that is going to happen. Government has said that some of this money is going to be targeted specifically for providers who treat COVID-19 patients. So this might be pulmonologists or infectious disease doctors. It may be in those categories. They're also wanting to specifically target nursing homes, dentists, and providers who have essentially Medicaid-based practices. And then, so details are yet to be announced. We're also told that for providers who, for some reason, were not able to receive first or second tranche monies, they will also potentially be able to get money from this third tranche. So again, we're waiting for further guidance on this. It seems like HHS has taken a bit of a pause to evaluate where we are, and I'm expecting in coming days or weeks we will hear more about the third tranche relief money. All right, I heard it said somewhere that this whole process of the relief fund money has been like building the airplane in mid-flight. Precious little guidance and interpretive do somewhat helpful, but not, not extremely so. We have terms and conditions that have changed at least 2 or 3 times since they were first issued. And so it's very disconcerting to everyone, to providers, to those of us who are trying to help providers. And, it's just very troubling. And we look at the PPP program, and it's quite a cautionary tale. The monies were made available. Everyone went out and got those monies. Many businesses did. They started spending the money, and suddenly interpretive guidance started coming down, which really, in some people's minds, changed the intent of the program and changed the criteria. So people started feeling, hey, we got the money at the beginning of the game, and now we're in the second half, and you've moved the goalposts and you've changed the rules. And as many of you have seen in the media, there's been some public shaming of certain recipients of PPP money, like Shake Shack and Ruth's Chris and the Los Angeles Lakers, and you go on. And there's been actually a stampede almost of folks giving the PPP money back. And so, is the same thing going to happen with the Provider Relief Fund? It's unclear. I will say in a new FAQ that did come out, there was a suggestion that HHS is not going to be quite as arbitrary. Let me read to you, in fact, this new FAQ. The question was posed, is the government going to come after providers to give this money back in a sort of very harsh and aggressive way? And the FAQ says that HHS does not intend to recoup funds as long as a provider's lost revenue and increased expense exceed the amount of the relief funding that a provider has received. So basically what that's saying is, if you can show the government that the lost revenue and expenses you have equal or exceed the money you got in the relief fund, is probably very unlikely that there's going to be recoupment, assuming, however, that you did some other things we've talked about, such as record keeping and reporting. And with that, let's go to the next slide. And here are my concerns regarding providers who receive the money. And one concern was failing to correctly assess their eligibility. Some doctors just assume, hey, money showed up in my account, so therefore I must be eligible. And obviously there is more to it than that, as we've already covered. Secondly, is inadequately tracking the use of the funds and failing to keep records. So it's very much like when the IRS does an audit. You know, they are expecting you to have records of your deductions and expenses and those kinds of things, and you may truly have had those deductions and expenses, but if you cannot document adequately those things, then they're going to be disallowed. And the same is true with the relief fund. You may have used the money completely properly, you may have been totally eligible, but if you cannot demonstrate with adequate documentation that you did so, then you may be required to give some or all of the money back. Another big concern I have is the issue of double dipping, by which I mean the use of money to reimburse the same thing. So, for example, if you got a PPP loan and you used it to pay salaries of your employees, you could not then take the relief fund money and use it for that same purpose with those employees. That would be reimbursing the same expenses from other sources. So that's a concern. Now, also, obviously, using the funds for unauthorized purposes. We covered what is authorized and what is not. So these four things are really the concerns I have regarding the use of the monies. So there are some common questions and answers that I wanted to go through with you. I would assume many of you would have some of these same questions, and we've really touched on some of these already. But the first question being, can you still accept payment if you are not aware that you are directly treating patients with COVID-19? And the answer is yes. In their FAQ, HHS broadly views every patient, every person out there as a possible case. So the fact that you don't directly know that you're treating someone with that condition does not disqualify you. Right? Question number two is, what if you don't see many uninsured patients? Does that matter? There is a requirement in the Provider Relief Fund law that says if an uninsured patient comes to you, you cannot charge them more than you would with an in-network patient, for example. There cannot be a greater cash outlay. That's one of the conditions I didn't cover. But there is no condition that you just generally see uninsured patients. So that is not a disqualifying factor. Question three asks if you can accept a portion of the money and then return what you do not need or want. And right now, that's one of these issues that we do not have guidance on. And the thought, as I read articles and see journals out there, is that the answer appears to be no, and that the acceptance is really another all or nothing proposition. But I certainly would advise providers, if they feel they've been overpaid or that they don't need all the money and that they feel some of it should go back, that they put that in a separate account and hold that money until the dust settles and we have more guidance on this issue. I certainly would not go out and spend that money if you have some doubts on that issue. Okay, question four. Here's the one about the double dipping. If you've already received other government money, such as a PPP loan, and you still accept provider relief money? And the answer is yes. Or to some extent it depends, as long as you don't overlap or double dip. The terms and conditions and the statute itself says that you cannot use the money to reimburse an expense that's already been reimbursed from another source. So we need to be doing careful tracking, careful analysis of the monies we are getting from different sources. Question five really goes to the same issue. Can you get a PPP loan and still get a provider relief fund money? And the answer is yes. They are not mutually exclusive programs. The issue is simply not using the money to reimburse the same thing. All right. Going to question 6, and that asks, can you use the provider relief money to pay salaries that have been impacted because of cancellation of procedures, cancellation of patient visits? And the answer is yes, but you just need to remember there is the limit. And here's the interesting interplay between the PPP loan and the provider relief money. PPP money limits your payment of salaries up to $100,000, whereas the provider relief fund goes up to $197,000. So you could use PPP money for the first $100,000, and you could use the provider relief fund money to go an additional $97,000. So you could actually use both sets of monies for salaries, but you would again have to track the limits on each particular fund. Right. Going to 7. Is receipt of the money subject to the False Claims Act? In other words, if you falsely attest, can you be sued or prosecuted under the Federal False Claims Act? And the answer is yes. That is specifically stated in the terms and conditions. Once again, we're very fortunate that within the last few days we did get this new FAQ that is saying, as long as your losses exceed or equal or exceed what you got in terms of federal aid, it's unlikely that they're going to go after you. But again, we are still lacking in some guidance here. And going to question 8, is HHS going to conduct audits of providers? And we have not been told specifically, but the answer is likely yes. They've allocated money to conduct audits, not a huge amount of money, but they have allocated money. And certainly those who received larger sums of relief aid are going to have a much higher chance of being audited. So question 9, what if the 30 days, which is now 45 days, has passed, and I determine I am not eligible or I cannot meet the terms and conditions? And the response is that you should return the monies to the government. And you do that using, again, the HHS portal. And if you're basically supposed to return the money the same way you got it. If you got it through electronic funds transfer, you are to go to that account, and you are to reject the money. And there's a specific code you use. I'll read it to you. This came off of the guidance. You're supposed to use R23, credit entry refused by receiver. Okay, and I'll read that again. It's R as in Ralph, R23, credit entry refused by receiver. And that will basically send those electronic monies right back to the government by your ACH account. You got a paper check, the guidance says that you can either destroy the check or you can mail it back to the federal government. So that's, as far as we understand right now, the procedure for rejecting and returning the money. Once again, that must be done within a 45-day time period. So the final question is, what if I got business interruption insurance money? And some practices have that coverage. Can I still receive federal relief money? And again, we don't have guidance here, but this is one where a lot of caution needs to be exercised, because most of the legal writers I'm seeing say that if you got that business interruption insurance money and you used it to cover some of your losses, you cannot double dip and reimburse those same losses with the provider relief money or even with the PPP money. So if you did get business interruption insurance funds, you should be very cautious in use of that money. All right, going to the next slide. So one thing I just do encourage everyone to do, and that is to try to, as best you can, monitor federal guidance either through your professional associations or by going online to the HHS portal to watch that guidance, because interestingly, the Terms and Conditions Act actually require you to be in compliance with existing or future regulations. Okay, going to the last slide here, I get asked the question, who's going to be liable for this misuse of the money? We may say you're in a practice of 10 doctors. Who's going to be responsible or liable? And the answer is that, the government typically follows the money. So if that group of 10 doctors bills under a single group billing number, the government is going to be going to the entity itself to recoup that money. However, they've also said that practice owners and executive officers could also potentially be liable to the extent they were part of that decision-making process. So that's as much as we understand right now. We also know that there is whistleblower potential. So, especially for those in larger practices who are receiving money, if you have disgruntled employees, they could report you and bring on an audit or an investigation, which is, again, all the more reason to be very cautious and careful in the use of the money. Well, that concludes my prepared remarks, but I'm certainly happy to entertain questions as best I'm able with the limited guidance that we have right now.
Kevin, thank you very much for a very substantive and thorough presentation. I think that you gave everybody that attended today's presentation very practical guidance on these very complicated issues. So thank you. Brian, I know we had some questions that came in throughout today's discussion. I'll turn the time over to you to facilitate the questions.
You bet. Thanks, Jason. Kevin, so a couple of questions we had that you touched on one just a moment ago on further guidance, and I think it's going to be anticipated to roll in on over time. And you mentioned a couple of sources. Is there any way to, a distribution list where they can actively be notified when that guidance comes out, or does the provider need to be pursuing that on their own?
Well, I'm assuming that means, can you get on like an HHS distribution list?
Right.
I am not aware of that. I have not been to the HHS portal recently, and so I don't know, but there may be a way to flag that on your computer system as a favorite where you can go to repeatedly, or you can get notices if something comes up. I'm not clear on that. Let me give you the website information. However, it's hhs.gov/provider relief. That's all one word, provider relief. So hhs.gov/provider relief.
So it sounds like the best option is to be proactive in seeking that, because what we found is that information, that guidance comes in at random times, different, they'll add an FAQ response, but you really have to be active in seeking out, further regulatory guidance. Another question we had, Kevin, thank you, is if someone has received multiple sources, they've received a PPP loan and a provider relief fund monies, is there any obligation to segregate those into different bank accounts, or is merely tracking through accounting means sufficient?
Yeah, that's a great question. I think there's more than one way to skin a cat here, and it could probably be done either of those ways. And I'm not an accountant or a bookkeeper, so I may not have the best solution to doing that. What I do know is that whichever way it's done, it's got to be something that you can substantiate and prove to an auditor. And if that means having money flowing out of different accounts, great. If that is rather a function of bookkeeping and ledger entries, okay, but it's got to be something you can replicate and prove to an auditor, and that's the key.
Yeah, that makes sense. Thanks, Kevin. Those are the questions that I had.
Okay.
Any others? Feel free to send them in now. We'll have a few minutes left. One other thing I had a question of, Kevin, is there, we see additional, we had the PPP, through the CARES Act and the Provider Relief Fund. Now we're seeing Congress talk about potentially additional stimulus packages. Anything you're hearing on what that might include, or is it still too early?
It still is early. I know there is a bill in the House for $3 trillion. I don't know what, if any, amount of that is for healthcare providers. I'm sure there's something in there. There's usually in these bills, it seems like something for everyone. But I have not studied the House bill. I'm not sure I'm going to study the House bill because I don't think it's going to go anywhere in the Senate. So
right.
But things are still developing, and obviously there's still $50 billion in the third tranche that hasn't even been dispersed, and we haven't even been given guidance on yet. So there's a lot to happen still.
Yeah, and I think there's $100 billion still in the PPP program that no one's taking because of the concerns. At least in my view, some of the concerns with that program is so there's still funds there. We'll see what happens with those.
Right.
Jason, those are the questions that I've had.
Great, thank you very much, Brian. And the remaining minutes, feel free to submit any questions that you have via chat. We'd be happy to address those. If there aren't any further questions, we will wrap up the call here shortly. Well, it doesn't look like we have any further questions today for you, Kevin. So in closing, I would like to extend a huge thanks to all of you on behalf of Parsons, Bailey, and Latimer for participating in our webcast today. I'd like to extend a big thanks to Kevin West for preparing today's materials, and a shareholder in our Utah office, Brian Elwood, for participating and facilitating the questions. Before we wrap up, as I mentioned at the beginning of today's webcast, we will circulate the slide deck along with a recording of today's presentation, with the understanding that there's a short shelf life on this material, as Kevin mentioned throughout his presentation today. That will be circulated to you tomorrow. And if you have any questions, please do not hesitate to reach out to Kevin directly. We'd be happy to address any questions that you may have offline. And with that, I'd like to thank all of you again for participating and joining us today. We wish you, your family, and all of your colleagues the very best of health. Thank you very much.
Thank you all.
Thank you.